before we move into that, I need you to first subscribe, leave a like on the video, leave a comment. 1998, 7 major financial institutions in Japan failed. And essentially, what had happened was that they got bailed out, again, like 2008, because of moral hazard and the banking crisis. But the good thing about this is that this sort of banking crisis, it got rid of the asset bubble in Japan. So prices in homes and stocks were somewhat getting normalized. And so the institutions, this is why they failed. So they had solvency issues, so they didn't have enough money. Lines, again, this is something that can probably only happen in Japan, but essentially lines were forming outside of the bank, and people were starting to panic because they're like, okay, well, we can't have access to our money. We can't buy food and stuff like that, right? That's what I mean by solvency issues. But in Japan, it's kind of weird because what had happened was that the branch managers at the local level, they're calling their higher ups and saying like, hey, there's a lot of people lining up outside of these banks. I think they are starting to panic or whatever, right? So in response, the higher ups at the bank said, just let everybody in, just pack the banks in, pack everybody, as many people as you can inside the banks, because we don't want people to see these lines forming outside, right? And then these people called up the Bank of Japan, which then Bank of Japan started calling up all the news media outlets and stuff like that and told them not to report this. But, again, this likely would only happen in Japan because people were kind of used to the Bank of Japan messing up and all this sort of stuff and just said, screw it. Okay, well, I can't access my money today. You guys will figure it out. They just went home. The media didn't report it, which is very strange because, if you guys know anything about American media nowadays, they're just like, panic and mayhem and fear. Oh yeah, this is gravy. This is easy ad dollars for us, right? Not in Japan though. Japan's just like, we have a duty to society not to cause a panic because this will only worsen the situation. And that kind of foresight is just lost upon North America nowadays, especially North American media, but that's just my personal opinion. Now we move into the 2000s. This was near around the dot-com bubble, but I don't know how much Japan was really affected by this. But essentially, they were having sort of inflationary expectations because they saw we finally hit the bottom, or we found the bottom, and they're starting to have optimism, right? Kind of, but not really. In terms of the debt in the private sector, all the excess debt was gone because basically they either defaulted or they got bailed out. Any sort of remaining ones that they couldn't get rid of, it went on the the government balance sheet, which meant the taxpayers basically shouldered their burden. Now, in order for their economy to recover, they need inflation, but it's not there. And any sort of remaining debt that they have, now that it's on the government balance sheet, it's not effective because essentially what happens is that when you don't have inflation, people's wages don't increase. People don't start spending more. They don't get to tax them more. And this debt has an interest rate that keeps going and going and going. And because you don't have the inflation there to keep it going, you're only essentially able to pay out the minimum, but the minimum isn't enough to overshadow the interest rates that you guys get charged on top of that. So debt gets bigger. You're just trying to throw everything you can that's available to you that's diminishing at it, and it's not really having an effect. So I was told about the Phillips curve, and essentially it's when low unemployment and less demand in the economy. And they basically couldn't employ enough people to meet the current demands, and the wages and cost of goods started rising, similar to what we're seeing in America today. But it's supposed to cause inflation, which is good, but it's not good in the sense that if it's crazy too high and that people aren't being employed, there's not enough money going to the hands of the people to spend and keep this whole wheel turning. But this was further worsened by people having to lose their jobs due to innovation tech because they couldn't find people to staff these places. So they started to lean into some automation. In this case, it was more of manufacturing automation, right? Like assembly line sort of stuff. Now, obviously, people weren't spending any money on luxury goods like cars and whiskey and so forth. But one interesting thing that happened was that there was a rise in cell phone usage, used for TV, subway passes, buying soda machines, conducting banking groceries and stuff like that, which is very interesting at the time. This is before the whole pay for use app apps and mechanics and stuff like that, but they were noticing that this new tech was driving people to actually do stuff with it, which is very interesting. But all of this was kind of moot because at this time also, people were really concerned with not being able to move out of their house, starting their own families and stuff like that. They just weren't concerned with that stuff, right? And this also caused the birth rate to decline because, like I said here, young people lack money and living spaces to reproduce. It happens. So their response to this is that they basically have monetary experimentation. This is when the Bank of Japan started saying like, okay, well, what we did before isn't working, so we got to start creatively working around this. Like, how do we solve this or whatever, right? So the Bank of Japan, this is also when they got rid of the word called window guidance, where they would create a bunch of credit or essentially give loans to these corporations with the notion that they will loan it out and start doing business and stuff like that, including the banks and so forth. So in this case, the Bank of Japan said it would stop quantitative easing when their deflation to inflation. When they go from deflation to inflation. Essentially, what I'm implying here is that they basically changed the name from window guidance into quantitative easing at this point, because they're like, okay, well, we're just going to keep injecting more money instead of a set amount into the system. We're going to just inject as much as possible because, maybe a bank will need 100 million yen when we're only able to loan them about 50 because they couldn't account for certain scenarios and that sort of stuff, right? But, again, because they threw more money at the problem, unemployment dropped, but inflation didn't really come in because companies were just using this money to expand, do all the sort of normal shit that they did before, which is pay off their debt, shore up their balance sheets, and so forth, right? Now, by 2006, a couple of years later, mild inflation did come back to Japan eventually because they just kept throwing money at the problem. And eventually, obviously, when banks are starting to grow, corporations start to grow, they need to expand and stuff like that. So it looked good. And as a result of that, it started happening again. It was very good, right? But they essentially said that, okay, at this point, after 6 years, we can get rid of QE. So they stopped injecting money into the Japanese economy and started tapering, right? But it failed because they bought securities from banks rather than non-private sector entities. So the automotive industry, the fishing industry, so forth, right? They just gave it directly to the banks. And the central bank increased monetary supply. Banks used these funds to shore up, like I said earlier, shore up their balance sheets and buffer toxic assets rather than creating new loans. So basically just kept their crappy investments afloat. One good thing, though, is that they somewhat avoided hyperinflation, which I don't really see as a good thing. I mean, you still had a lot of negatives that happened, but whatever. Moving into 2008, this is when we had the U.S. Credit crunch, financial crisis, whatever you want to name it. The U.S. in response had adopted a 0% interest rate policy by lowering its target benchmark Fed fund rates, which is basically the interest rates, from to 0 to 0.25. The Fed also announced the decision to purchase agency debt and mortgage-backed securities on a QE monetary policy. Kind of weird how they just kind of took this from Bank of Japan, but moving into Japan relied heavily on exports to the U.S. because, like I said, the auto exports that they had at the time, and I guess to this day as well, was still very good in the sense that it was still a majority of their GDP because the Japanese cars were great in safety, great in mileage, and great in fuel economy, et cetera, right? But they also kind of copied the U.S. in monetary policy and pursuing expansion fiscal policy, and essentially they did this by they lowered the benchmark uncollateralized call rates from 0.03 to 0.01, and they also increased the quantitative easing to purchase long-term Japanese corporate bonds, similar to what the U.S. did during the Asian financial crisis. And so they were purchasing their own bonds and commercial papers from financial institutions. So they were essentially throwing more money at the problem, giving more money to themselves and corporations again. So they also said that, we're also going to open up more bonds. And I know most econ people will say, well, you just can't just issue more bonds like that. I don't give a shit. This is what they did. This is history. So they issued more spending plans on infrastructure, on everything that they can think of, like everything that you just take a quick look of how your current government spends their money. It's mostly in infrastructure, mostly just in, yeah, I would just say infrastructure. That's because it's the easiest way for them to put money towards stuff. It's not the solution. It's just an easy way for them to throw it at them. But they started issuing more aggressive spending plans and increased government bond issuances to 33 trillion. But this was bad because they also doubled their debt deficit, similar to what Canada's doing. But I think Canada's multiple times worse. But there was a Japanese economist at the time that said that the World War II ended the Great Depression because, well, essentially women started coming into the workforce, and what happened was because of the war production and everything, people needed stuff to supply for war, and they were just spend crazy. And the interesting thing is that this person said at the time, this was like multiple years ago, saying that if depression is as bad as radical, if this depression is really bad, radical changes are needed. Such as changes must come with innovative, driven, creative destruction of social structures. So what he means by that is that the old social structure was that women are typically like homemakers. They're not in the workforce and stuff like that, right? And what had happened was that World War II caused the women that were strictly homemakers to enter the workforce, therefore doubling whatever sort of labor force that you have out there, which means that you could actually start producing more.